Everyone. Now, before I get started, let me do a sound check real quick. All right, if you can hear me, just, vote yes or no if you can't hear me, and I'll start to see the responses. Let me just give me a second here. All right, so it seems like most of you can hear me. I'll leave it there for just a bit longer before I close it, just to see more people vote, to make sure more people can hear me. All right, so it seems like there's no issue. So thank you all for voting, and let's get started. All right, so all right, so good evening, everyone. My name is Brian, and I'm going to be your speaker as well as your host for tonight's webinar. I'm a leader here at Phillip Capital. Hence, I'm going to have to show you and bring you through an introduction to Phillip Capital, as well as the products and services that we provide. It's very brief. It will take around, like 10 minutes or so. So stick with me till then, and then we'll get into the core content of tonight's webinar, right? So let me just get started here. All right, so this is just a disclaimer that this presentation has not been reviewed by the Securities Commissions Malaysia and is only provided for general educational purposes only. Hence, it's not a recommendation to buy or sell any investment products. And PCSB is not liable for any investment decisions that you may make based on this presentation, right? If you want to conduct any form of investments, you have to consult a qualified licensed financial advisor, right? Because investment is very, very risky, right? So do keep that in mind, all right? All right, so just a quick introduction about Phillip Capital. We were incorporated on the 7th of October 1995, and we are a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. Formerly, we were actually known as Phillip Futures because back then we only offered futures as well as CFDs. But recently we actually started to offer stocks. So that's why we rebranded ourselves. And we are also a trading participant, as well as a participating organization of Bursa Malaysia. But most importantly, we are a holder of the Capital Market Services License, which means we are legally allowed to provide you these products and services. All right, so we have 11 Phillip Investor Centers across Malaysia, with our headquarters located in Kuala Lumpur. So if you are in any of these states nearby, you could definitely drop by and give us a visit. We don't bite, so we're actually pretty friendly. So don't worry about that. Just drop by and say hi. Okay, so this is the Bursa Excellence Awards, because we have won many awards throughout the years, and we have quite a good and solid track record. Just recently we won the first runner-up for the best retail derivatives trading participant, as well as the second runner-up for the best overall derivatives trading participant from Bursa. So this should speak for itself. This wide array of awards definitely is a good signage. All right, so we are located globally. We are situated in around 15 different countries, all the way from Asia. We have China, Japan, Malaysia, Singapore, all the way to Western countries like France, Turkey, the UK, as well as the US. So this allows us to have a global coverage, right? We have products listed on our company from things like CME Group. We have things from ICE Exchange, Eurex, JPX, TOCOM, SGX. And basically what that means is that if you want to trade any of the products from these exchanges, you can do so through us. All right, so that's really quick. All right, we are your one-stop solution for trading, and that's because we offer a wide array of products. We have variety. We are talking about futures, right? Index futures, metal futures, all the way to the good old stocks, Malaysian shares, US shares, Singapore shares, as well as CFDs. We have local Bursa shares, and as well as the NYSE shares, Nasdaq shares, and US index CFDs. So we have a lot of products under our belt. Hence, we are your broker of choice, right? We offer 24-hour broking and execution support. We offer advisory services for our clients, as well as the latest market news. And actually, you could actually learn with Phillip Capital, right? We offer free one-to-one coaching sessions, free seminars and webinars, as well as a really quick, free, and hassle-free online account opening process, right? And in the free one-to-one coaching session, basically what we will be bringing you through is an introduction to futures, CFDs, and stocks trading, mainly around product knowledge, as well as a really quick platform coaching for our own charting system. So if you're interested to join any of the events in the future, right, whether it be webinars or seminars, you could scan this QR code to register for any of our events. I will stay here for around a few seconds while you take a screenshot, but you can also find the events listed on our website, phillip.com.my. Yep, so that is just a bit more, and yeah, next. All right. So we also have our weekly market calls, which is on the left, you have the market recent updates, which is held every Monday at 11:15 a.m. And on the right is the live counter technical analysis, which is held every Monday at 8 p.m. Both by our research team, and on the right is by our technical analysts. So if you are interested to join any of these events, do scan this QR code and you will be fine. Right, next up, if you are interested in opening an account with us, you can scan this QR code. We offer stocks, futures, and CFD. So if any of these products interest you, definitely scan this QR code to open an account with us. And actually, the content that I'll be going through tonight works across all markets. So be it stocks, or futures, or CFDs, it works across any. So if you like my strategy and you like any of these products, do reach out to us. All right, so let's start. We have our trading platforms. First, we have Flip Nova, which is the platform that our clients use to trade futures. We have over 90 technical indicators. You can buy and sell directly off charts and all of that cool stuff, as well as price alerts, which are very useful if you are not going to be able to look at the screen the entire day. It's very, very useful. Next, we have our stocks trading platform, Holmes Global 2.0 MY. Which is actually our newly refurbished stocks platform. We moved on from our older platform to this new one, so it looks brand new and really, really clean. All right, next we have our Phillip CFD Trader, which is the platform that our clients use to trade CFDs. All right, moving on, we have our promotions. So currently we are coming to the end of this campaign, which ends actually next month, the end of next month, which is actually also the end of the year, called Trade and Earn with Phillip. But it's not too late. You can definitely still come in and you can still stand a chance to win these cool products, things like touch and go reload pins, things like the iPad, the AirPods, as well as the Apple Watch. So all of these, I skipped a bit too quick. All of these can be won from just trading. You just trade and you can stand a chance to get these rewards. All right. So yeah, let me just move on to the content. All right, so I'm just gonna take a sip of water and then I'll go straight into the content. All right. All right, so once again, thank you all for coming to join tonight's webinar. While I am here as a dealer, right, from Phillip Capital, I want you guys to also know that I am actually here as a friend, right? I want to see you succeed in trading. I want to see you achieve long-term profitability. So doesn't matter what strategy that you use. You could use Elliott wave, support resistance, Fibonacci's. Doesn't matter what you use. When you come to my webinars, I hope you come to it with an open mind and try to take what you can from my webinars to put them to your own overall strategy. All right, so let's just get started off. So first off, the outline will be like this. We will kind of go through two main concepts today. The first one is multi-timeframe analysis, and the second is liquidity concepts. In both of them, I'll go through the concept/theory first, and then I'll move on to the examples on the charts. All right. So yeah, let's get started. So what are timeframes? All right, now this seems simple to many of you probably, but timeframes basically showcase to you the specific movements of the markets across a period of time, right? And knowing this in itself doesn't really, help a lot, but how can multi-timeframe analysis help you in trading? Now, this is the good part, right? It can help you understand the bigger picture narrative. You won't get lost in low time frame price action anymore. You will have great and more accurate entries and overall less drawdowns. And also you will have a better risk to reward ratio, right? So if you don't understand any of these, it's fine because I will explain them later on in the slides. Okay, so let's move on to the next one. So here we have a weekly time frame chart, right? And basically what that means is that one candlestick here equates to 1 week of price action, right? It's really huge, right? 1 week is just in one candlestick. Now, if we zoom in just a bit, we open, you know, the skin and we go in, you can actually see that we go down to a 1 hour time frame where each candlestick represents 1 hour. And here, previously in that one candlestick on the weekly, here we have 32 candlesticks for the entire week. We zoomed in, right? And then also, if we move down to the 15-minute time frame, here we have more candlesticks, right? And each candlestick represents 15 minutes. So zoomed in. Notice anything different between these screenshots, right? We have more information, more candlesticks, more things to process. And in the same time period of that 1 week, too much price action and candlesticks is apparent on the 15-minute time frame compared to the weekly in a 1 hour time frame, right? So we zoomed in, we see everything spread apart. We are seeing fractals of the same picture. So basically, you are zooming in and seeing the exact same picture with more details each time you go down a time frame. The data that you see on the higher time frames, like the weekly or the daily or the 1 hour, they will always be more important in terms of the overall direction than the lower time frames because they show you the bigger picture. The weekly time frame shows you a bigger picture compared to the 15-minute. The 1 hour shows you more than a 5-minute. And this is very important, even though it seems very fundamental and very basic, very beginner based. It's actually something that many people understand in theory, but they don't know how to apply it once they got onto the charts to click buy or sell. For example, the longer a trend persists, the more important it is. Imagine if someone ran for an entire day compared to a person that ran for just 5 minutes. The person that ran a whole day is going to be more important than the person that just ran for 5 minutes. And I'll show you this exact example on the charts. Here we have a 5-minute time frame, right? As we all know, the markets can either be bullish, bearish, or ranging. And most people, they look at this chart and then they would think, oh, you know, lower lows and lower highs, right? We're forming a downtrend, we should be selling, right? The trend is your friend, so we should be selling along with the bearish trend. You know, so all right, cool. You know, so let's do a sell, right? We see a support down there. That price has bounced off many times in the past. We saw it break, right? So let's do a break and retest, you know, trade. I'll just put my sell entry at the previous support, now hopefully becoming resistance. Let's go short there. But then, you know, guess what happens? We get stopped out. And then you will be scratching your heads wondering why that happened, you know, and most people don't even find out why it happened. But here's a tip. Go on to the higher time frames and see what happened. All right, now if we zoom out onto a bigger time frame, for example, the H4, this is the exact same picture I showed you just now, but on the 5-minute. This is on the 4 hour. And you can see that all of that price section was actually just data of one single week. It looked a lot. Let me go back. Like it looked a lot, right, on the 5-minute, but you zoom out, it's like it's barely anything. And in fact, here you can see that on the 4 hour, you zoom out, we can clearly see that we are bullish, right? We're making higher highs and higher lows, and the downtrend that we saw on the 5-minute, it was just a pullback or retracement on the higher time frames. So now we understand that, hey, 4-hour, daily, weekly, it may be showing me a different thing. I shouldn't just stick to one time frame and just trade off of it. Now, could you be profitable doing it? Yeah, probably, but you would be a lot less accurate than you would be, right? It doesn't mean that we shouldn't use the low time frames at all, though. The answer is no. This one's a given, right? We need both of them together, because if you base your entire trades, entries, and exits on the higher time frames, you are exposing your capital to large potential drawdowns. Yes, you are exposing your hard-earned money to unnecessary drawdown. Imagine waking up and seeing, oh my God, I'm 29,000 ringgit in drawdown. I'm gonna pull my hair out, and this example really can be seen in this here. This is a daily time frame, and we have an obvious support. Price bounced it off, we have an obvious support here, right? So here we have the support being broken, and then we use the same idea that we just used in the previous slides. Support break, become resistance, right? Okay, sell, but this is on the daily time frame. If we only used the daily time frame as our entry, look what would happen. You will have your entry at the previous support level that was broken out of to become resistance, right? And most people would put their stop loss probably above this reference point here, this previous swing high. People will put that stop loss because, hey, if we stop making lower lows and lower highs, we should be going up, right? So they'll put their stop loss there. So here you have the entry, you have your stop loss, your take profit, right? This is just an example. And look what happened. The market went up, it went above, went above your entry, it went past it. And then look at how much it went up. It went up a total of 261 points. And if you wonder how much that is in ringgit terms, it is around 6,525 ringgit in drawdown. Imagine waking up and seeing that. Most people don't even have that money in their trading account, let alone experiencing the drawdown, right? So to prevent this from happening and to give yourself unwanted stress, what you should be doing instead is you have the idea that you want to be selling here, right? You want to sell here, right? This is going back to the previous slides. I want to sell here. Cool. So what I should have been doing is I should have gone down the time frames into the 1 hour, right? This is the same exact support that we saw break, and we want to sell from here. We can now go down onto the lower time frames and then look for an entry around that area, right? Around that trade idea. Here we have an example. Wait for a 1 hour support to form and then wait for it to break. Because this would mean that, hey, the lower time frames are kind of shifting in your favor. You can see that we've made higher highs and higher lows here. We had no instances of a support breaking. We had no reason to believe that, hey, we are going to be able to short from here because we don't see anything lining up. But once we see this support form, and then we saw it break right here, still on the 1 hour time frame, still here, we saw it break, we can then tell ourselves, hey, on the daily, my trade idea was to sell from here. And now I'm seeing the 1 hour time frame shifting in my favor. I'm seeing it shift bearish again. It's realigning. Look at this really obvious break. We broke the blue support level and then we went lower very convincingly. Let's use the same idea on the daily, on the 1 hour right here. Wait for that retest and then enter again, right? So now you have entered on your 1 hour zone, this blue support, become resistance. Stop loss with the same concept above a previous high, take profit wherever you want it to be. In this example, I use the exact same targets as the daily, right? So here you can obviously see that my stop loss is a lot smaller than previously and my take profit remains the same. And this is an example of having a more accurate entry, having a smaller stop loss, but having the same take profit levels with a better risk to reward ratio And what risk to reward ratio means, for those that don't know, is that you would risk maybe 50 ringgit in one trade, but you would target maybe 200 ringgit, 300 ringgit as your profits. If you targeted maybe a 200 ringgit take profit, risking 50 ringgit, it means that for every one trade that you win, you can lose 4 trades in a row and you will still be break even. You wouldn't have lost any money. So that's what a risk to reward ratio means. If you are interested in this, in the future, I might make a new webinar on this topic, but for now, that's the basis of it. All right, so now we see that we only had a drawdown of 55 points, which is only around 1,375 ringgit, but our take profit remains the same. So this is what it means by scaling down time frames, understanding what the bigger picture is showing you, but taking your entries on a smaller time frame to endure smaller drawdowns with a better risk to reward ratio, which will help you in the long run, right? Because over a long term, you can lose more trades than you win, but you will still come out as profitable. All right, so yeah, Brian, sure, we have the big time frames, we have the small time frames. How can we use this information? Well, we're supposed to use all of them together, right? They're all a part of the puzzle, a piece of the puzzle, right? You use the time frames that are on the higher side of it, like the daily or the weekly, to form a directional bias. And then you use the lower time frames for more accurate and precise positionings, like entries and exits, right? So that's basically how you use this information. And the one thing you should take away from this is, do not get lost in the price action and the information on the lower time frames. You may actually see a different story than what the big picture is currently painting. Don't get stopped out by the markets, right? Protect your capital, protect your money, and get it while you can. All right, so we know that big time frames are good, but how do we use the big time frames or the higher time frames to look for a directional bias? Is it going up? Is it going down? How do I know what might play out more than the other? Well, that's where the next concept comes into play, liquidity concepts. Now, I say this is a very basic part of my strategy, but don't get me wrong, this is where my entire strategy is based on. This fundamental aspect of it is all based on this concept, right? This liquidity concepts. So pay close attention to this, because if you know and understand this and you practice it on the charts, you are going to see the market very, very differently. All right, so what is liquidity? So liquidity is essentially just buy and sell orders, right? If something is very liquid, for example, FCPO is very liquid, it means there are a lot of people trading on them, right? And for a trade to happen, you need to have a buyer and a seller. That's when a transaction or a trade occurs. Hence, liquidity just equals to orders, things like buy limits, buy stops, sell limits, market executing orders. All of these things are orders, hence they are all liquidity. Now think about it like this. The theory is this. In a marketplace, right, you go to a pasar, right, you go to buy and sell things. You are there either as a buyer or a seller, right? And if you are a buyer, you want to buy low, right? You want to buy at cheap prices. But if you are a seller, you want to sell at high prices because you want to sell things at expensive. If you buy low, you save more money. You sell expensive, right? You basically get more profits. This is a physical marketplace, like you go to buy vegetables, apples, whatever. When you are trading on the charts, you are trading in a digital marketplace, right? It's the exact same thing as a physical one, but it's on your phone. It's digital, right? Hence, you have to learn where the buyers and sellers are positioned. This is important. You have to know where people are buying and selling more, right? Think of it this way, right? That last sentence maybe didn't click for you, and that's fine, but think of it this way. if I'm selling something, I want to sell in a market with many buyers, right? Because I can set my price however I want to, and people can, whoever wants to buy from me can buy from me. I don't have to, fight with other sellers. I can just sell at my own pace and at my own price. And if I'm a buyer, I want to buy from a market with many sellers, right? I can just go in and there's so many choices to choose from. So using that same concept, right? Using that exact same concept, what if I told you that we could predict where most people will place their buys and sells at, and that we should take the opposing end of their trade? For example, what I mean by that is if we see an area with a lot of buying, we should be selling, right? If in an area of many buyers, we should be the sellers to their buys, and in areas of many sellers, we should be buying from them. So we are taking the opposite end of their trade, right? This is why sometimes you put a buy and you have a stop loss, right? Sometimes the market comes down, hits your stop, and then it goes back up, right? You were looking to do a buy, you had a stop loss somewhere like down below, right? Maybe you want to buy here, stop loss down below. Suddenly, market comes down, it takes you out of the trade, it hits your stop loss, and then it reverses in your direction. Have you ever seen anything like that, right? Likely you probably have. So what's really happening, right? Well, some people say, maybe it's the banks, the big players, they're taking your liquidity or your orders, but in the end, all of these are just theories. No one really knows why it happens or what's really going on behind the scenes. But what we can be sure of is that the market often hunts for these orders, and we just have to follow the market's direction after it has hunted these orders, right? So you don't need to know the why, you just have to know the what, the when, and then the how. That's what you are here as. Now, the next part will be the examples and more of the concept in itself. The fun part here was just like a theory, right? It's just like a theory to make you understand it a lot more easier, so you can process it better and remember better. But what I mean by eating up orders, right, is that we often see the market react to certain areas and then see a very, very rapid move away in the opposite direction. Here, we can see an example of orders, right? We have a high here and we have the orders here. The market came up to these orders and then we saw a large displacement lower, right? Same thing with the blue box. The market came down beneath these lows and then a large and quick rapid displacement higher, right? So this is the occurrence that I'm talking about. This is the way that I view and trade the markets. All right, so now we'll get into actually breaking it down, right? Here we can see it a lot clearer. We have these red circles to kind of like highlight what's happening at where, but let's move on to the next part. So as we know, a candlestick has 4 main points, right? We have the open, the high, the low, and then the close, right? And in this case, it's a daily candlestick, right? So this is a higher time frame candlestick, the daily, right? Now, if we zoom the daily candlestick into a lower time frame, like maybe the 15-minute, we will probably see something like this, right? Here on the right in that, that yellow box, you can see what people would call a double top. Most people actually see it as resistance, right? And what do you do at resistance? I'll give you like 5 seconds to think about it. What should you do at resistance at a double top? You should sell, right? You should be selling. So what happens is that people would sell at resistance. They will sell at that double top. Where would they put their stop loss? Well, maybe above that double top, above highs, right? So they would put their buy stops above these highs. And what are buy stops? Buy stops are buy orders. Buy orders means the people here on top here are buyers. And remember what I said, once we have identified where the buyers are, we can now do what? We can now be the sellers to their buyers, because these are where buy stops are. We have sellers sell stops and the breakout traders buy stops, right? People that trade breakouts. So what the market will do is it will always come up, take out those buy stops, and then we can see a large displacement in the opposite direction. In this case, it was a bearish move, right? So buy stops on top, take it out, bam, we go lower. Lower into where? Lower into sell stops, right? Now, if buy stops are above highs, then sell stops are below lows. It's just the opposite, opposite occurrence, right? Buy stops above highs, sell stops above lows, because below lows we have breakout sellers, we have buyer sell stops, stuff like that. That's all you have to understand. Buy stops above highs, I want to sell to them. Sell stops below lows, I want to buy from them. Easy to understand, right? So I mean, if you have any questions, you can just ask them, and then I'll answer them at the Q&A section later on. So just pop them in, and I'll see them later on. But all right, so this is the core concept of it all, right? So it looks like this on an actual candlestick chart, because previously I used a line chart, but here is what it looks like on a candlestick chart, right? It's the exact same thing, just in a different format. We have a daily high right here, daily low, the market went up, took out buy stops, and then reversed down, and then dumped it off at sell stops below lows. This may take a while for you to kind of remember, but don't worry, this webinar is recorded, so do not worry about that. You could watch it as many times as you want, but it's this is probably it. All right, so now we have an example on the SCPO weekly time frame. Now I start off from the weekly because remember it is a higher time frame, and here we have a weekly low, right? Because each candlestick here is a weekly candlestick. So weekly low, really important area on the 12th of July last year. Let's zoom in and see what actually happened when the market came down into these weekly lows. Now you may have questions asking like, oh, why did you take that low and not this low? Now this takes experience, but there are ways to kind of pinpoint it, which I will get into later on. But let's just kind of get into the daily time frame, which is one time frame lower than the weekly time frame. Now this is the exact same date. I'm not fooling you. This is the exact same date, 12th of July of last year. We had that previous weekly low. See how the price came into it, right? It came into it, and then it immediately reversed higher, right? Now, remember, in this case, it is a taking of sell stops. Once you take out sell stops, what should you be doing? You should be taking out sellers and then buying those sell orders, right? So the market immediately came up into where? Came up into the weekly high, which we have buy stops. See how it seeks out the opposite end of the buy orders after taking out sell orders? It's crazy. It immediately came back up, and then it took it, and then guess what happened next? Right? It took out sell stops, and then went to hunt the opposing buy orders, and then we saw a reversal lower. Right? So this is something that you can see every day on any time frame, regardless of what asset that you trade, right? So see, it dropped, like it went up a total of 762 points, and then after it took out the weekly high, it came down a total of 378 points. Now this is on a daily time frame, so this looks like a lot, but scaling it down, you could still see like the exact same picture, but on a smaller scale, right? So this happens every time, right? It happens every day, every time. You may not get an entry, and your direction may not be correct, but it happens every day, right? Here I have an example, right? We have daily highs and lows in the form of that, thick black line. I have the orange circle as the market eating up orders, and I have the reactions after eating up orders in form of blue and red shapes. So let me just, right, so here we have it. So market eats orders on the left-hand side, we have the market eating up a daily high. See how it rejects down, and then we have a new daily high up here. We have more buy orders above, market took it, came back down, and we have a daily low here with where the market came down, took it, went straight up. You can see it happens almost every day around daily highs and lows, right? Now it won't have a big reaction, every day, but it will have maybe 10 points of reactions. Maybe it will reverse 15 points, 20 points. It depends on the context of it. So, but this in itself is already a very good scalping strategy, right? This concept alone you can use to scalp 10 points a day, 20 points a day, no issue, right? So yeah, it's and I'm not saying that what you trade is not as good as this, but this is definitely something that can help you improve your own trading, right? You can use your own understanding now, pair it with this, see which one, like which area is the highest probability, and then take a trade there. I personally just analyze these strategies myself, right? The market theory of buyers and sellers. So once you understand these concepts, you can actually apply them onto the actual charts. And the next part actually is where I'm going to get into my recent trade examples. Okay, so here we have it. So this is a forecast that I sent out to my clients, right? So basically, I send out forecasts to my clients every single day. And this is one of them. This is sent on the 15th of November, which is this month. This is the daily time frame. Now, in case you can't really see, in this picture at least, I told my clients, hey, I might look to see resistance around 4024, 4020 to like 3977. I'm looking for resistances at these areas, right? So if I drop down onto the 1 hour time frame, I'm like, hey, this is using that multi-timeframe analysis concept. I'm breaking down things from the daily down to the 1 hour, so I get the both of both roads. I can get accurate entries, and I can have less drawdown, right? So here I'm like, hey guys, I'm looking to sell at around, not sell, but like I'm looking to find resistance at around 3993 and support down below, and guess what happened? So at the end of the day, I did a market review, and here you can see at the exact same level at 3993 on the 5-minute time frame. Now this is a 5-minute time frame, so it's very, very low. You could have taken a sell here, and then at the level just above that at 4023 up here, you could have taken 2 sells, for example. So this is just 10 points stop loss, 10 points take profit, and it worked out pretty well for that day. Now this doesn't happen every day, but it does happen, and I just thought I just put it out for your attention to see that this forecast is something that I send out to my clients to help them kind of like pinpoint these zones. And this is because this one was on the 15th, right? The exact next day on the daily time frame, I sent one forecast out again, and I said, hey, I'm looking to sell, not to sell again, but like for to see resistance around 4052, 4068, around these areas. I'm looking for resistance around there, right? This is on the 1 hour time frame right here. Now we may find resistance around these same areas that you can see here, 4023, 4040, 4052, with supports down below. So I was looking at these areas of key support and resistance, right? And guess what happened? When the market opened, it came up to the resistance of 4023 and 4040. We saw a potential to sell down below, and then same thing, down when it came down to support, we saw an area to buy from. So this is something that I sent out to my clients. So yeah, now this is interesting because this forecast, this exact picture was today's price action. I sent this out today in the morning around 9:20 a.m. before market open. this was today's price action. So you could literally go onto the charts right now or after this session to compare what really happened. So I told my clients, hey, we may see resistance around that brown area, that 3943, 3918, and we may see resistance there on the daily time frame. Going down to the 1 hour time frame, I highlighted more things, because now there's more areas of support resistance. What happened, this is a zoomed in picture of it, if you can't really see, but this is a zoomed in picture. And these 3918 resistance, 3950 resistance. And today, guess what happened? This is the screenshot of the market close at 6 p.m. You can see our price came up to 3918, and what's above a high? Buy orders. So what should we do? So what should we be doing with buy orders? We should sell to them, right? So see how the market tanked down into the support down below in blue, which is 3864, 3878, and then see it rebounded up. So this, like today was a good day to take short-term trades with, so yeah, this is basically my trading strategy as of now. There are more parts to it that I will split up into different webinars, but this concept right here of just highs and lows, right? Just buy stops and sell stops, liquidity concepts, this forms the basis of my own strategy, right? So the examples that I just showed you, there were more intraday and short-term trades. However, notice how it was based off of the areas on the higher time frames. Now, this doesn't mean that you cannot be profitable holding long-term trades. You just need to have realistic targets and proper risk management. Things like when to get in, when to get out. So these are things that you have to kind of practice to get a hang of, right? So yeah, next up, I actually have a surprise for all of you. So actually, I send out these forecasts every single day to my clients, which are exclusive for coaching clients only, for PKC clients. Now, if you are from other states, you can also register under us. So you could technically be my client, even though you are from Selangor, or even if you aren't from Malaysia, you could still be my client, right? So if you register under me, you will get daily markups of technical analysis charts, right? You get market breakdowns and compilations for supply, demand, and other fundamental data, right? As well as a further in-depth explanation of strategies that I use. I will teach it in this group. Now, disclaimer, this is not a signal service. This is not a signal group. This is only for reference and for educational purposes only. Hence, PCSB or me, Brian, we are not liable for any investment decisions that you make on the forecast based on this group. And I send them every single day, and I've been sending them for like months now. I sent them first back in May, and I've been sending them since then every single day. So if you are interested to join, and gain access to this forecast group and gain access to me, you can just open an account with us, right? It's totally free, right? You don't have to pay anything. It's totally free. So all you have to do is just scan this QR code, or if you don't know how to do that, you can just reach out to me after the webinar, and I will assist you however I can. But remember, this is only exclusively for if you open an account with us under my branch, right? So yeah, if you have any questions, do ask them in the chat box down below. If you have any questions who you want to ask me, I'm definitely here to answer any of your questions. I will take a sip of water and while I wait for your questions. All right. Any questions, comments, concerns, just leave them down in the questions tab below. And do keep in mind that because this is a technical strategy, it works across all asset pairs, right? It works across CFDs, US indexes, shares and all that stuff. So it's a skill that you can bring anywhere that you really want to. So don't worry on that. But it is something that you have to practice like everything else. You do have to practice it as much as you can and gain the experience from it to become a good trader. All right, so here we have a question. All right, and it is, what is the usual time frame for FKLI day trade? Time frame. Now, most day trading time frames, right? They kind of first they depend on the trading hours. For FKLI, it's around 8 hours a day. If you include the night session, then it's maybe like 11 hours. So I'd say the time frame for the FKLI day trade is, I would say, 1 hour and below. You could take an like 15-minute trade. You could take a trade on the 5-minute, on the 1 hour and below. It should be fine, right? Obviously, the lower that you go, there will be more, price action, more data that might confuse you. So try to base your trade ideas around a stable time frame, like the 4 hour and above. But you could take your entries on like the 5-minute. I hope that answers your question. Okay, in higher time frame, 3-touch point uptrend or downtrend, or do you prefer naked eyes new lower high for uptrend or new lower low for downtrend? Now, it depends on what time frame you are looking at as well, but let's just assume you are talking about the daily time frame. I assume you're asking me at what point do I consider it a downtrend or an uptrend. Now, personally, I don't look at uptrends or downtrends as I explained in the presentation. I look at orders being taken and then they dump it off at the other side. That's how I look for my bias, right? My bias for today, is it up or down? If it just took out a daily high, I'm expecting it to go lower. So that's why I'm looking for a downward movement. But this is very subjective. Some people say, oh, if I see 2 higher highs and higher lows, then it's an uptrend. If I see 4 lower lows and lower highs, it's a downtrend. So it really depends on the trader himself and what he has seen. As boring as the answer sounds, that is quite literally the truth. What separates a trader that's profitable from a trader that isn't profitable basically is the experience. Yeah, so I hope that answered your question. But for me, it's just naked chart. I don't use any indicators. I don't use anything except the chart itself. So it's naked chart trading, right? For me, it's naked chart. Oh, I have one question here, which is nice. Why don't you use indicators? Now, there's nothing wrong with indicators. Don't get me wrong, but I've used them before because I'm a trader myself. And let's just say that when I use an RSI on a 4-hour and then I go down onto the 1 hour, it changes. Maybe I see a signal to buy the RSI on the 4-hour, but then I go down to the 1 hour, it's telling me to sell. So it gets confusing, and then it gets kind of weird sometimes. You get conflicting signals. One's asking you to buy, the other asking you to sell, and most indicators are what we call lagging, which means that they normally only happen after the move has already finished. So you might be a bit too late to trade, is what I can say from my experience, which is why I prefer naked chart trading, right? So on a daily time frame, a daily high, it will be that daily high no matter what time frame you go down to, right? It will be a high point, right? You go down from the daily to the 4 hour to the 1 hour, it will still be that same daily high. It doesn't change, right? It's completely objective. It leaves room for no self-doubt. So that's why I don't use any indicators. But if you have found a way to use your indicators correctly, don't listen to me, just use it, right? Whatever works for you, works for you. All right. Do you use OHLC to calculate pivot points? Can it be used as an entry point and target profit? Well, I basically just use highs and lows as my pivot point. Obviously, the daily high is more important than a 1 hour high, for example. So that's one way you could look at pivot points. But just obvious moves up or down, for example, let's see if I can draw something. Let's just say this is an obvious pivot point, right? Now this is then that pivot point. So whatever is natural to your eyes is what's a pivot point. So, but yes, it is mainly highs and lows. Yes, that's a pivot point. Can it be used as entry and target profit? Definitely, yeah. It depends on your own entry model. For me, I just like to go onto the 5-minute time frame and just try to look at a bearish candle form and then a break to go lower. That's basically the entry model in itself. So yeah, I hope that helps. May I know how long you paper trade before confidence with your trading strategy? Well, I paper trade like 2 months, man. As in I paper traded for 2 months on the live markets, but before I even paper traded live or demo traded, I was backtesting months in advance. I backtested like 6 months of data, so it depends on the trader in itself. But for me, I did like 6 months worth of data collection, and then I forward tested or paper traded another 2 months. So yeah, that's basically what I did. But it depends on yourself really. All right, so I think that is all the questions. Let me check again. No more questions so far. All right, so if you are interested in opening an account with us, you can. Oh, wait, 1 second. You can contact us, right? These are our social media platforms. We have Facebook, YouTube, which you'll be able to see this recording on our YouTube. We have Telegram, LinkedIn, Instagram, as well as our website. But if you want to reach out to me, you can contact me at our branches contact number here, as well as our email. If you're not from Kuching, don't worry, you can still send me an email and I will contact you through WhatsApp, right? But if you are in Kuching and you wanna really talk to me, you can come to the address listed here and I will try to answer your questions. Now, obviously, you can't just come in here and just ask me to teach you the strategy, but you could just contact me on WhatsApp, and I'll try to answer your questions as much as I can. This is how you can reach out to me. All right, so that is it for the webinar, right? I hope you guys enjoyed it. Any questions that you might need to take some time to think of, just reach out to me after the event, and always good. So yeah, thank you for coming on a Tuesday night, and I appreciate you all. I will see you guys in the next one, which will be held around next month. Sneak peek, don't tell anyone, spoiler alert, it's around December. So that will be another webinar where I will go through another different concept that is a part of my trading strategy. So do keep in touch for that. So yeah, I'll see you guys soon. Have a great one. Bye-bye.